You are 19 years old. You are sitting in a bedroom that smells like instant noodles and old carpet. Your laptop is open, the video is 14 minutes long, a man in a Lamborghini is explaining how he made $4,000 before breakfast. He is 24. He is wearing a watch that costs more than your mother's car. He says the word forex. You don't know what forex is. You look it up. Foreign exchange market, $7.5 trillion traded every single day, the largest financial market on earth. Open 24 hours, 5 days a week, no boss, no office, no ceiling. You watch the video 3 more times. You are not stupid. You know this sounds too easy, but you are also 19 years old. You work weekends at a warehouse. Your back hurts after every shift. You have $600 in your account. And somewhere on your screen, a number is moving. Up, down, up. And the man in the Lamborghini says anyone can learn to predict which direction it goes next. You close the laptop. You open it again. You download the app.
You are still 19. You spend the next 3 weeks watching every free video you can find. Support and resistance, candlestick patterns, moving averages, Fibonacci retracements, the RSI, the MACD, something called price action, something called smart money concepts, something called ICT. Every video introduces a new system. Every system promises consistency. Every creator tells you the others are wrong. You buy a course for $297. You tell yourself it's an investment. The course is 40 hours of content. You watch all 40 hours in 11 days. You open a demo account, play money, virtual trades on real markets. You turn $10,000 demo into $31,000 in 3 weeks. You feel like you understand something most people don't. You feel chosen. That feeling is the most dangerous thing that has happened to you so far. You don't know that yet. You are 20. You open a real account, $500, real money, your warehouse money. The first trade you place feels different from every demo trade you ever placed. Your hands are slightly unsteady. Your heart rate is elevated. You are watching a number that represents your real life move in real time. You make $80 on your first trade. You feel invincible. You lose $140 on the second. You feel sick. You make it back on the third. You lose it all plus more on the fourth because you didn't put a stop loss. You told yourself you'd watch it manually. You fell asleep. You wake up to a $500 account that now shows $180. This is where most people quit. You are not most people. You deposit $300 more. The first rule of this market: the market doesn't know you exist. It doesn't care about your course. It doesn't care about your chart. It doesn't care about your rent or your mother or your warehouse shift that starts in 4 hours. It just moves. And right now, it is moving against you. You are 21. You have blown 4 accounts. Total lost $2,300. You don't tell anyone. Not your mother, not your friends, nobody. You start a trading journal. Every trade, every entry, every exit, every emotion you felt before you clicked. You start to see a pattern, not in the market, in yourself. You lose money when you're angry. You lose money when you're chasing a trade you missed. You lose money when you've already made money that day and you think you're untouchable. You lose money when you're scared and cut winners too early. You lose money when you're greedy and hold losers too long. The market isn't the problem. You are the problem. This realization doesn't feel like progress. It feels like standing in a room and discovering the walls are made of yourself. You change things. You set hard rules. Maximum 2 trades a day. Stop loss always placed before entry. Never trade Monday open. Never trade Friday close. Walk away after 2 losses. Walk away after a big win. You follow the rules for 2 weeks. Then you break one. You lose. You follow the rules again. This is the grind, not the trading, the rebuilding. Over and over, the same lesson, the same test, different market conditions, same you. You are 22. March ends. You open your journal. You ran 47 trades, 31 winners, 16 losers. Net profit, $680 on a $2,000 account. 34% return in 1 month. You sit with that number for a long time. It isn't the amount. $680 is not life-changing money. It's what it means. It means the edge is real. It means the discipline is working. It means the 3 blown accounts and the 40-hour course and the 18 months of journaling were not wasted. You don't celebrate loudly. You open April's journal and write the date. You tell one person, a friend who also trades. He's had 3 profitable months himself. He nods slowly when you tell him. He says, "Don't change anything." That is the best advice anyone has ever given you. You are now different from 90% of the people who downloaded the same app you did.
Most of them quit in the first 3 months. Most of them blame the market. Most of them never kept a journal. Most of them never sat with themselves long enough to find a pattern. You are still here. You don't know yet what still here will cost you. You are 23. Your personal account is too small. $2,000 can make you $680 in a great month. $680 is not a living. $680 is a supplement. You need more capital. You don't have more capital. Then you find the prop firms, companies that will give you access to $100,000 in trading capital if you pass their challenge. Prove you can make 8% without losing more than 5%. The challenge costs $500. You pass on your second attempt. The first attempt you fail on day 9. You were up 6%. You needed 8%. You forced a trade. You blew the daily loss limit in 1 session. You pay the $500 again. You pass the second time. They fund you. $100,000 in real capital. You keep 80% of the profits. Your first funded month, $2,400 profit. Your cut, $1,920. You stare at the payout notification for a long time. This is no longer a hobby. This is income. You don't quit the warehouse yet. You're not ready to do that. You've seen too many traders get comfortable and sloppy. You know what comfortable does to your rules. But you tell fewer people where you work on weekends. Something is shifting. You are 24. You quit the warehouse. The decision takes 3 months longer than it should. Not because you're not ready financially, because quitting means this is real now. This means if it fails, you have nothing to point to except yourself. You quit on a Tuesday. Your manager shakes your hand. He looks confused when you don't explain where you're going. You go home. You sit at your desk. The market's open in 47 minutes. This is your job now. The first week alone is strange. No alarm, no uniform, no one to answer to. Just you and the chart and the rules you built. The isolation hits faster than you expected. Your friends work jobs. They are busy during the day. You are busy during the day, but in a way nobody around you understands. Your mother asks how it's going. You say fine. She doesn't know what fine means in this context. Neither do you, fully. Your income is not a salary. Some months are $3,000. Some months are $8,000. 1 month is $14,000. 1 month is negative $400. You learn to live on averages, not months. You learn to separate your self-worth from your P&L. That separation takes longer than anything else you've ever learned. You are 26. People have been watching you. You didn't notice at first. You posted a few trades on a forum 2 years ago, then a few on a Telegram channel a friend started, then your own channel. 1,200 followers, then 4,000, then 11,000. They want your trades. They want to copy what you do. They want to follow your entries in real time. You start a paid group, $97 a month, 300 subscribers on launch day, $29,100 a month from a Telegram channel. You sit with that number and feel something complicated, not just pride, something else. These are real people, real money. They trust you, and trading is not consistent. Your edge works across hundreds of trades over months. Individual trade calls don't work that way. Followers enter late. Followers miss exits. Followers ignore the stop loss. Then they message you at midnight. I lost $800. Why didn't you close it earlier? You close the message. You open it again. You realize something. When you trade your own account, you are accountable only to yourself. Now you are accountable to 300 people who don't understand your edge, only your outcomes. That is a different kind of pressure. The market doesn't care about your subscribers, but your subscribers care about your market, and those are not the same thing. You are 29. Someone messages you. He manages a small family office, $12 million in assets. He has watched your track record for 14 months. He wants to allocate $500,000 to you. PAMM account. You trade. You keep 20% of profits. He keeps 80%. You accept. 6 months later, he introduces you to 2 other investors. then 4 more. AUM under management, $4.2 million. You are no longer a retail trader. You have crossed a line that most traders never cross. You are managing other people's money. This changes everything about how you trade, not the system, the weight. When it's your money, a losing month stings. When it's their money, a losing month is a phone call you don't want to take. When it's their money, the drawdown isn't a number on a chart. It's a retired couple in Birmingham. It's a business owner in Lagos who trusted you with 3 years of savings. It's a man who told his wife this was a good idea. You don't sleep as well anymore. Not because you're trading poorly, because you're trading better than ever, and it still doesn't feel like enough. You learn the most important rule of managed money. Communication is the product. Returns are just proof. You are 33. A hedge fund in London contacts you, not to copy your strategy, to hire you. They've been watching your public track record for 2 years. They have done due diligence on your signal history, your PAM results, your risk metrics. They offer you a base of £180,000 plus performance allocation on a $40 million book. You take the meeting. The office is on the 22nd floor, glass and gray, Bloomberg terminals on every desk, men and women who speak in basis points and Sharpe ratios like other people speak about the weather. You realize something in that room. You are fluent in their language now, not because you studied for this meeting, because you spent 10 years building the vocabulary one trade at a time. You take the role.
The markets you trade now are different. Not retail forex pairs with tight spreads. You're trading institutional flow, option structures, macro positions across G10 currencies, correlations between bond markets and FX, geopolitical positioning. Your scale means your entries move price. You cannot place a $40 million position the way you placed a $500 position at 20. You have to work into it, build it across sessions, across days. You are no longer reacting to the market. You are part of the market. You are 38. You manage a $200 million currency book. You no longer talk about trades publicly, not on forums, not on Telegram, not anywhere. Not because you're hiding, because at this level, talking about what you're doing moves markets against you. Your former subscribers message the old channel sometimes, asking if you're still around, asking for a trade. You don't reply. You are not the person they followed anymore. That person sat in a bedroom and watched videos about Lamborghinis. That person blew 4 accounts. That person kept a journal and cried over a $300 loss. That person built an edge out of nothing but stubbornness. You respect that person, but you are not him anymore. The people you talk to now don't have Telegram accounts. They have Bloomberg terminals and Reuters feeds and private lines to central bank research departments. You have a morning call every day at 6:45 with a macro strategist, a fixed income analyst, and a political risk consultant. 1 call, 3 people, 45 minutes. That 1 call shapes how $200 million is positioned for the next 24 hours. You don't feel powerful. You feel responsible. That is not the same thing. You are 42. The account is performing. Your year-to-date is up 31% in an asset class where 8% is considered excellent. You have made your firm significant money. You should feel like you've won. You sit in the office on a Friday evening after everyone has gone home. The screens are still running. New York session winding down. Tokyo about to open. The market never closes, and neither really do you. Your ex-partner left 2 years ago. Not dramatically, not with arguments. She just said one evening that she had been dating the market for 4 years and she was tired of coming second. You didn't argue, because she was right. You have missed birthdays, weddings, the slow build of ordinary relationships that require presence you can never fully give. The people who know you well now number very few. 2 colleagues, 1 friend from the early forum days who also made it, your mother who still doesn't fully understand what you do. You sit at the terminal. Tokyo opens, the yen moves. You adjust the position. You are very good at this. You have given a significant part of your life to becoming very good at this. You are not sure what that means yet. You're not sure you want to find out.
You are 47. You tell yourself you will retire at 50. 3 more years. Build the personal book to a level where the fund income is irrelevant. Step back. You said this before, at 35, at 40, at 45 again. The problem isn't money. You have money, more than you ever imagined standing in that warehouse at 19. The problem is identity. Remove the markets and what is left. You have spent 27 years becoming this, learning this, sacrificing for this. The market is not something you do, it is something you are. And that is the thing nobody in any YouTube video ever warned you about. Not the blown accounts, not the sleepless nights, not the isolation, the slow conversion of a person into a function. You are the most technically capable version of yourself that has ever existed. And sometimes, late at night when the screens are off and the flat is quiet, you wonder what the earlier version would make of you. The 19-year-old in the bedroom, the warehouse smell, the Lamborghini video, the hunger. He wanted freedom. He got precision. Those are not the same thing either. You are 51. You left the fund last year. You trade your own capital now. $8 million. Personal account. No investors. No morning calls. No performance allocation. No one to answer to except yourself. Like the beginning, but nothing like the beginning.
You trade 2 hours a day. Morning session, London Open. You close the laptop at noon. You are relearning how to have afternoons. It is harder than anything the market ever asked of you. The structure you spent 30 years building, the rules, the discipline, the system, all of it was scaffolding for this. The irony is sharp and quiet. You had to become an institution to earn back the simplicity you started with. Somewhere right now, there is a 19-year-old in a bedroom. The laptop is open. There is a man in a Lamborghini. There is a number moving on a chart. Up, down, up. And the 19-year-old is doing the math. He doesn't know about the blown accounts. He doesn't know about the journal. He doesn't know about the nights. He doesn't know about the Telegram group and the subscribers messaging at midnight. He doesn't know about the woman who left. He doesn't know about the Friday evening alone in an empty office watching Tokyo Open. He doesn't know what it actually costs to build an edge in a market that has been running longer than any of us. But he will find out. They all do. The chart moves, the market opens, and somewhere a new level begins. If this hit different, subscribe. A new hidden world every week.